China's central bank believes the yuan will remain stable in 2017 despite expectations of rising U.S. interest rates.
As the Chinese economy stabilizes and becomes healthier, and the nation makes achievements in the supply-side reforms, and global investors become more confident in China's economy, the yuan's exchange rate will naturally be on a trend to stabilize.
Zhou said China has many monetary policy tools. Its policies will be prudent and neutral, and the falling foreign reserves is not bad. He also said the central bank will continue to lead market expectations. The Chinese yuan has recovered against the US dollar so far this year, and that eased some pressure on the monetary authorities in China to combat a capital flight. So the forex reserve went back up in February, reversing a 7-month drop. But the U.S. might announce an interest rate hike in March, and that would once again put Asian currencies on the line. Investors hope for the central bank to tighten monetary policies in order to tame rampant credit growth at home. If those policies are overdone, they will choke China's economic growth. Yet if China leaves the current situation intact, it could face stronger capital outflows chasing higher interest rates in the U.S. For now, it seems the central bank is putting domestic issues first.
The interest rate differential can always motivate traders to make some short-term transactions, and money will move toward the place with higher interest rates. But in the medium term, every country's interest rate is determined by its domestic economic conditions.
China's domestic economic conditions are showing warning signs in its credit structure, which is currently dominated by bank loans. That's due to a lack of direct financing channels for companies, forcing already highly leveraged companies to borrow even more from banks. With such a concern, the central bank is holding a long-term view on its strategy, playing down short-term volatility in the yuan's exchange rate while focusing on domestic credit bubble. Xia Cheng, CGTN, Beijing.